The UK tax landscape is shifting, and for non-resident Indians, the changes are significant. Come April 2025, a new set of rules will come into effect, impacting the financial strategies of many. Whether you're an established professional, a recent graduate, or a seasoned investor, understanding these changes is paramount. This isn't just about numbers, it's about securing your financial well-being in a changing world. The UK government's decision to abolish the non-domicile tax status has sent ripples through the NRI community. For years, this status offered a degree of tax flexibility, particularly on foreign income. However, that era is coming to an end. The clock is ticking, and NRIs must act swiftly to understand and adapt to these new regulations. This is not a time for complacency. The changes are far-reaching and demand careful consideration. From understanding the nuances of the new rules to exploring potential mitigation strategies, NRIs need to be proactive. Your financial future in the UK hinges on your ability to navigate this evolving tax landscape effectively. The good news is that knowledge is power. By understanding the intricacies of these changes, NRIs can make informed decisions that protect their assets and secure their financial future in the UK. Stay informed, stay proactive, and stay ahead of the curve. For years, the non-domicile tax status, fondly known as non-dom, has been a familiar term among NRIs in the UK. It allowed individuals, under certain conditions, to shield their foreign income from UK taxation. However, this privilege is being phased out, marking a significant shift in the UK's approach to taxing its foreign-born residents. Starting April 2025, the concept of non-dom will be a relic of the past. NRIs who have made the UK their home for 4 years or more will find themselves on par with their UK-born counterparts when it comes to taxation. This means that their global income, including earnings from India, will be subject to UK tax laws. The implications of this change are substantial, particularly for NRIs with significant assets or income generated outside the UK. Rental income from properties in India, interest earned on Indian bank accounts, and even capital gains from investments in the Indian stock market will now fall under the purview of HMRC, the UK's tax authority. This shift signifies a move towards a more standardised tax system, where residency rather than domicile plays a defining role. While this may simplify the tax code in principle, it creates a new set of challenges for NRIs who have structured their finances around the non-dom status. Adapting to this new reality will require careful planning and a thorough understanding of the new rules. The abolition of the non-dom status doesn't impact everyone equally. Certain groups within the NRI community are likely to feel the effects more acutely than others. Understanding whether you fall into one of these categories is crucial for early planning and effective mitigation. Indian professionals working in the UK on Tier 2 visas are among those who will experience the most significant impact. Many have built their lives in the UK, contributing significantly to the economy while maintaining financial ties to India. The new rules mean they will face increased scrutiny of their foreign income, potentially leading to higher tax liabilities. International students from India who have transitioned to post-study work visas or skilled worker visas are another group facing uncertainty. As they embark on their careers in the UK, the loss of the non-dom status could impact their financial planning, potentially affecting their ability to save, invest, and build a future in their adopted country. Furthermore, NRIs who have been residing in the UK for over 4 years, regardless of their visa status, will also be subject to the new regulations. This includes individuals who may have been considering returning to India in the near future, but are now reassessing their options in light of the changing tax landscape. It is important to remember that each individual's situation is unique, and a blanket approach to tax planning is rarely effective. Consulting with a qualified tax advisor is essential to understand your specific circumstances and develop a personalized strategy. While the abolition of the non-dom status might seem daunting, the UK government has introduced a transitional relief period to ease the burden and provide NRIs with time to adjust to the new rules. Understanding these provisions is crucial for minimizing tax liabilities during this period of change. From April 2025 to March 2027, a special window of opportunity exists for NRIs with foreign income. During this period, only 50% of their foreign income will be subject to UK taxation. This significant reduction offers a valuable opportunity to restructure finances and potentially reduce overall tax obligations. Moreover, a special repatriation scheme has been introduced, allowing NRIs to bring their overseas income into the UK at a reduced tax rate of 12%. This is a substantial discount compared to the usual tax rates, making it an attractive option for those looking to consolidate their finances in the UK. However, it's crucial to remember that these relief measures are temporary. The clock is ticking, and NRIs must act decisively to take advantage of these provisions before they expire. Delaying action could mean missing out on substantial tax savings and facing a higher tax burden once the transitional period ends. Navigating the complexities of these transitional arrangements requires careful consideration and expert guidance. Consulting with a qualified tax advisor can help you understand the full scope of these reliefs and how best to leverage them to your advantage.